Imagine this. You're trading a trend that looks solid, then out of nowhere the price flips direction, stops you out, and rockets the opposite way. What just happened? You witnessed a market structure shift, the silent signal that smart money has just reversed the market. In today's video, we're going deep into this concept. You'll learn not just what a market structure shift is, but how to use it like the banks do. From liquidity grabs to confirmation candles, these charts will reveal the real story behind every reversal. Stay till the end, because this one insight could completely transform your win rate. A market structure shift, or MSS, is not just a break of a trend line, it's a violent declaration that the market's intention has changed. Picture this. In a downtrend, lower highs and lower lows form a rhythm. Suddenly, price smashes through a recent high with massive momentum. That's a structure shift. It tells you the sellers are exhausted and buyers just took control. In the chart example, the shift happens only after a liquidity sweep, confirming it's not random. Smart traders don't enter during the chaos, they wait for the shift, confirm the intention, and enter on precision. One of the most misunderstood ideas in trading is the difference between a break of structure base of structure and a change of character of character. Base of structure happens when the trend continues higher highs breaking higher highs, or lower lows breaking lower lows. But change of character is when the market shows its hand. It's the first crack in the trend, a subtle shift that hints at reversal. Look at the swing points. We have bullish structure until price breaks a swing low. That's the change of character. Soon after, a lower high forms, followed by another breakdown. That's confirmation the bulls lost control. Spotting this early gives you sniper entries before the crowd catches on. Now let's compare master structure shift to change in state of delivery change in state of delivery. While MSS is a technical event, change in state of delivery is about how the market behaves after the shift. Think of master structure shift as a door slamming shut on one direction, and change in state of delivery as the moment a new door quietly opens. On the chart, after MSS is confirmed, price action transforms. It becomes cleaner, directional, and precise, the hallmark of institutional delivery. The first half of the chart is messy, the second half is surgical. That's the transition from randomness to algorithmic order. ICT traders rely heavily on these shifts to anticipate moves before they even begin. According to ICT, the inner circle trader market structure shifts don't happen randomly. They follow a specific pattern. First, price grabs liquidity, taking out stop losses. Then comes a displacement candle, a strong move that breaks structure and creates a fair value gap. Next, price retraces to fill that imbalance. In the image, this is where the order block rests. Once filled, price expands away. This is the logic ICT traders use: sweep, shift, retrace, and expand. MSS is the signal, but the fair value gap and order block are the tools for execution. Have you ever noticed how strong bullish candles often appear right after a major low is swept? That's not a coincidence, that's institutional accumulation. The large candle breaking the previous high didn't come from retail traders. It's a displacement candle proof of momentum from smart money. This type of price action confirms the market structure shift. The power and speed tell us that big money just took control of the market. Recognizing this pattern allows us to follow their lead, not guess, not react, but execute with confidence. Now, the big question, how do we trade it? The key is, don't chase the breakout, wait for the pullback. After the MSS, price almost always retraces. That's your opportunity. Identify where price might return, like a fair value gap, an order block, or even the equilibrium of the move. Set your entry there, with your stop just beyond the liquidity sweep. Your target should be the next structural level. This gives you tight stops, clear targets, and institutional logic behind your trade. Patience after the shift is what separates pros from amateurs. Market structure shift works in both directions, bullish and bearish. In a bullish reversal, price first sweeps a low, then blasts through a prior high. That signals the buyers are now in control. In a bearish reversal, price fakes upward, hits liquidity above a swing high, then drops hard, breaking a previous low. That's your bearish MSS. In both cases, the key is liquidity first, then structure break. This gives you a clear sign that the market's direction has flipped and you can safely align your trades with the new trend. To increase your win rate, combine market structure shift with other confluences. For example, check if the market structure shift happens during a major session, like London or New York. That's where institutions act. Add Fibonacci retracements to find retracement levels. Overlay volume to confirm momentum. Look for equal highs or lows, which often act as liquidity magnets. And always mark out your order blocks before the shift happens. When 2 or 3 of these tools line up with the market structure shift, you're stacking probabilities. That's how elite traders consistently win. Let's bring it all together. Market structure shift is the clearest sign that the market is ready to reverse. Not because retail says so, but because the smart money made their move. We've learned how to identify it, when to trust it, and how to trade it with confidence. You now understand the difference between BOS and change of character, the significance of liquidity sweeps, and how to use ICT concepts like FVG and CISD. Study the charts, backtest the setups, and start seeing the market like the institutions do. And if this video helped you master MSS, drop a like, subscribe to Financial Freedom FX, and comment below, MSS Mastered.